Hi there, this is Mike Larson, Editor-in-Chief with Money Show, and I'm here at the Las Vegas Money Show with Omar Ayales, editor of Gold Charts R Us. Omar, how are you?
Doing well, Mike. Thank you.
Glad to see you here. I mean, obviously we've got a great crowd. It's been very busy. I know that a lot of people are interested in gold after a period of time where people, it wasn't in the front of everybody's sort of mind share. Talk a little bit about precious metals and what you see going on there, why you're bullish on the metal.
Well, first of all, Mike, great to be here. Great show. I mean, the energy is amazing and it's very, very vibrant. Very high quality attendees. So, it's great to be part of it this year again. One of the main issues of my macro thesis is basically in 2022 we lived through a secular shift regarding inflation.
Sure.
Okay, where a 40-year downtrend was reversed. And it was reversed in a way it was so violent that it's basically telling us that the road for inflation over the longer term is actually to the higher side, uptrend to the higher side. Because it is likely that the higher inflation will outpace the pace of interest rate hikes. Okay? It is likely that gap between inflation and the interest rates remains negative, and that is a huge catalyst for gold. And for the longer term, right now there's a very bullish cyclical movement that started, in September, November last year, and we think that it could rise all the way up to $2,400. And the reason $2,400 is the value amount is because that's gold's 2011 peak, inflation adjusted to today.
Got it. Okay.
So yeah, I think the elements are in place, technically speaking, fundamentally.
And when you and I have talked, or I've seen some of the work that you've done, you've also pointed out how interest rates factor in. And sometimes one market gives you one signal, another might be conflicting. But I think it seems, from what you've told me, the signals from gold, from interest rates, it's all kind of pointing to the same thing, right?
It all points to the same thing. We see the breakout in interest rates, and not only manipulated rates like the Fed funds rate, but when you take into account longer term rates, right? Like market adjusted rates, like for example the 30-year yield, or the yield on a 30-year U.S. Treasury, for example. And when you see the movements of those, how that broke out, following inflation, where actually you see different elements in place that are there that are going to not guarantee, but that make it so that the narrative for higher inflation is there. For example, the strong U.S. job market, that keeps a stronger consumer, or the reopening of China, global fragmenting, basically where the trend of globalization that was implemented post the Second World War economy, is reversing. And what is that? That in itself means higher prices for longer. That means that all of a sudden the world is going to be buying out of convenience rather than efficiencies, and that in itself is a trend that is going to just make things, higher, more expensive, and again, something that fuels inflation.
Got it. Now, policymakers will say, "Oh, you don't have to worry about inflation. We're going to do what we need to tamp that down." I think it's fair to say you're probably a little skeptical of that, right?
The reality is that there's a huge amount of debt in the world, especially sovereign debt, and the reality is that the more expensive that central bankers around the world make this debt, it's going to be harder to pay off, and that in itself translates directly into pain for people, on Main Street, and it's going to be tough for the monetary authorities to keep to do what they have to do to rein in inflation, and that's where I see that there's going to be a gap between the interest rate that is priced into these debt instruments and where inflation ultimately ends.
Got it. So if that all does come to pass, what is something that an investor can do to essentially profit from it? What types of stocks or ETFs or what have you, instruments that you think are best in this environment?
Well, I mean, definitely being one of the main proponents would be the gold universe. And by that I mean, of course, instruments related to gold and silver, and even like the miners of that, right? So, like for example, I do like physical storage always. Like I was just having this conversation with this gentleman in one of the exhibit halls. It's great how they store the gold in different jurisdictions.
Yep.
Amazing. But also you need to have like some ETF where you can actually be trading it. You have one different forms. You want the miners. If you really want to leverage your position, you want to be able to have the Nico Eagles of the world, the wheat and precious metals, and then of course you can dab with smaller companies and and try with those too. That have like a lot more upside potential.
And that would be AEM and WPM, correct?
WPM.
Got it. Okay.
Yeah, those would be like the two seniors that I like.
Okay.
But juniors, I mean, you guys have some here, and there's a lot that have like great quality assets, and I really like, for example, Vizsla Silver, very small company. VZLA is the symbol.
Okay.
It's a small company, but great assets. They're well funded. Going in the right direction. And silver really has the most upside potential. Within this commodity super bull cycle.
Okay.
Right?
Okay. If anybody wants to continually follow your work, see how your thinking evolves over time, where can they go? What's a good website to start with?
Well, you can definitely try our website, which is goldchartsrus.net.
Okay.
Okay. Feel free to also email me, oyales@aidenforecast.com. And either of those places, we'd be more than happy to give you information, share information.
Great. Omar, I really appreciate you taking some time out here at the Money Show. Thank you so much. And thank you to our viewers here watching from the Las Vegas Money Show.